Hello, beautiful people of Sacramento, California, and the world abroad. Welcome to another West Report. I'm your host, Tyler West. We are going to talk about the importance of the home appraisal today. And here to enlighten us on this bit of esoteric wisdom is my father and our broker, Richard West. Welcome to the show.
Thank you, Tyler. Glad to be here.
So, a lot of people underestimate the importance of the appraisal in their in the sale of their home. I think this is something that people should be able to wrap their minds around, and I think well, here I would want to know why is it important to get a home appraised?
First of all, I do want to do my 2-minute update for the local area, which I would like to do at the beginning of each one
Wonderful.
of the
Yep.
podcasts for the Real Estate West team. Nothing has really changed in the last week since last Wednesday. The California housing market is extremely hot. It's gaining more traction. Prices have grown again month over month. There was a tiny bit of a settling in July, so I thought maybe we might start seeing a little correction, but that tended not to be true. California's median price hit a new high, an unbelievable $827,940 in August.
That's average home price, isn't it?
Average home price. And get used to higher prices because they're still going up. That is the 5th all-time high in less than 6 months. It's crazy out there for sellers to obtain and get the highest equity amounts when they sell. Unfortunately for buyers, it's becoming more and more difficult to qualify with this high of an average price. So homes are still flying off the shelf in record time. We still have a low inventory. Hopefully that's going to change in the future, but for the current time, I don't see it in the next month or two. So
it's supply and demand. There's a lot of demand and there is not a lot of inventory. Is that correct?
That is correct. For example, week over week, we had 3,728 new listings. We have only a total, and I'm talking about in Sacramento, about 5, 6, 7 counties around us. We only have 4,067 homes for sale right now.
Wow.
Pending sales, we have 3,047 of those 4,067 homes are now in pending. We did have 3,448 closes in August. I'm sorry, in the last week. That's just in 1 week. Price increases. Some folks, when they don't sell right away, they decide to increase their price. I think that's usually a losing proposition, but for whatever reason, they do that. 192 folks decided to do that on their listings that didn't sell. And then we've had 1,423 price reductions in the last week. And a lot of times when they actually reduce their price 2, 3, 5%, or even sometimes a little bit more, but usually around 2, 3%, their home sells with multiple offers. So that's my 2-minute wrap up for today in the Sacramento area real estate market.
Wonderful. Thank you for that bit of intelligence on the local real estate market. So with regard to appraisals, the available inventory of real estate is highly subject to the scrutiny of a appraisal. And that's not just on the side of the potential buyers or the actual listers. The banks want to know what that property is valued at. So we're going to talk about that today. Can you explain why it's important to get a appraisal from a human being?
Yes. Well, first of all, an appraisal is an unbiased assessment of a home's value. Now, there's everyone who's involved in the sale of a home typically has a stake in its value, right? You got the seller who wants the highest price possible. You got the buyer, of course, who would like to see the lowest price possible, because most of the times when they make an offer, there's a contingency that the appraisal has to meet the offer amount. So a bank, if there's a loan involved, will require a California state licensed appraiser, a professional, to come out and perform an unbiased assessment, not representing the buyer and the seller, but mainly the lender. And those are hard to refute when a unbiased assessment comes in from an appraiser. Now, state licensed appraisers are professionals. They don't have any ties to the mortgage lender or the buyer or the seller except to perform this unbiased appraisal. If they're a neutral third party, and supposedly and effectively, they provide a fair, unbiased appraisal and value of a property to the lender. Now, appraisers, in order to become an appraiser, have to go through hundreds of hours of training. And typically, the first 2 years, or at least the first 2,000 hours performing appraisals, they're what's called an appraisal trainee. And they typically need at least an associate's degree minimum. Now, to become an advanced, like a broker appraiser, most of those folks today are required to have a bachelor's degree. So these folks have earned their pedigree.
Yeah. Now, you were a state licensed appraiser for some years. When was that?
From 1996 to 2002, I was a state licensed appraiser, performed over 500 appraisals. So with that, that was before I got into becoming a realtor and then a real estate broker in the early 2000s, late 1999, right in that time frame. It really means a lot to me that I went through that training, because it helps me apprise my sellers of a fair and honest value, although I typically then add quite a bit higher amount onto my analysis for them. But I do inform them what an appraiser most likely is going to appraise it at. Then, of course, I try to sell it for more, and very successful at doing that.
It seems like having that background would give you some superpowers, some leverage, and some negotiating potential with buyers when you're able to understand the lens that a current state licensed appraiser is looking through the value of the property at.
Well, yeah, exactly. This is, the left-handed people have that T-shirt that says, "I'm left-handed. That's my superpower." In the real estate market, I could sometimes put on my appraisal hat as a former state licensed appraiser, and inform them that I have that pedigree also. Years in the business, 6 years as an appraisal prior to getting into real estate. So it really helps me to also discuss and talk with other agents who are representing buyers or sellers on the other side, and impressing upon them that when I list a home, I can back up the value of that home. So that really helps me sell homes for higher prices.
I've noticed that there are occasional instances where a buyer will waive the appraisal. Should folks get an appraisal prior to listing or buying a home?
Well, that's correct, Tyler. That a lot of times folks to get an offer accepted today will remove contingencies. One of those strong contingencies that sellers love is when they remove the appraisal contingency, so that their offer is not based on the value of what an appraiser is going to provide in the appraisal. We call that the market values. For example, if home's listed at $600,000 and they get 5 offers in, it's 600 or 575, 600, 625, 650, 660, 670. If someone came in at 640, 650, for example, and they remove contingencies, they're more apt to get their offer accepted. And that's because in most cases, and there's ways our team can validate this, they have enough cash in their wallet, in their bank, to support paying more than what the appraisal price is. We call that the market value. Whenever you have a frenzy and a bidding process, taking the price sky high, way over the list price, providing the list price is the appraisal price, folks can sell their homes for a lot more than the appraisal value. And that's called the market value. And it happens a lot in the seller frenzy markets like we have had since last October, November, and still currently have. So yeah, you can pay more for a property.
How do you prepare your home uh, for a sale and ensure that it gets appraised for the right value?
Well, you have to put your mindset in the mind of an appraiser, in which I have that background, and you have to take a look at what is an appraiser going to uh, look at. What items are they going to look at? There's a whole host of them, hundreds, in fact, of items that they do look at. Appraisers in the last 15, 20 years have gotten much more sophisticated. They're almost like home inspectors. I mean, they know enough to look at the roofs. They look for water damage. They look for roof damage. They look for externally um, rotted wood on the roof and sidings. They look for cracked concrete, damaged fences. That's just on the exterior. They look for cracks in the fireplaces, um, and many more things on just on the exterior. Then the most important thing is on the inside. They're going to take a look to see if the home has been taken care of. Things that upset the value to an appraiser would be things like the carpet's ripped up, the floors are scuffed and separated and scratched up, walls are full of holes and mismatched paintings. So there's lots of things with the right real estate realtor and broker through a walkthrough, they can point these things out. And there are certain things that really need to be repaired or taken care of. And it's okay to sell a home as is, but understand that if you're going to sell a home as is and not take care of all of these defects and imperfections, that it's best to go ahead and lower the price, because that in the mind of the buyer and the buyer's agent, that's what, and the appraiser, that's what they're going to do.
I was going to ask about that. I know that when it comes to buying motivation, a motivated buyer, um, a lot of what they're willing to pay depends on cosmetics. But the appraisal, the the licensed appraiser is not going to just look at cosmetics. They're going to look at they're going to evaluate the property for potential problems down the line. So can you speak to that for a minute?
Yeah, along with again like damaged roofs and leaking and cracks and those sorts of things on the exterior and in the interior. Um, they're also going to do basically a partial pest inspection. If they see any infestation of subterranean termites or rodents, those sorts of things, that will greatly affect the value of a home. In the appraisal, the appraiser will downgrade a good quality home to a fair quality home, drastically reducing the value. There are certain loans, and Christy can speak to those with the FHA and VA requirements over other types of lending. There's some very important safety features that have to be corrected and need to be addressed prior to putting your home on the market, unless you are absolutely not going to allow folks who are coming in uh, with a loan desire to be either an FHA or a VA loan. But when you do that, you drastically reduce your marketability of your property, because whatever the property percentages is probably high 60s, maybe even 70% of folks out there, first time home buyers especially, they're looking for an FHA, and if they're vets, a VA loan, because there's some benefits to getting those types of loans. So these safety features are very, very important. There's a lot of basic, simple things like light switch covers. If there's cracked or if they're broken or they're gone, replace them. That's a $2 item. If there's no railing on your back deck or on your front porch, as required at times for VA and FHA, get those things repaired. Firewalls between the garage and typically a kitchen or hallways where most doors to the garage come into play. Your garage door opener should be functional with the security beam to protect animals and small children or any kind of life. So there's many things that appraisers are going to look at that are
And this is why it's useful and rewarding to work with somebody who has been a state licensed appraiser, who has looked at the value of properties through those eyes. Back in the day, I understand it was, okay to be a state licensed appraiser and a licensed real estate agent. I understand things have changed quite a bit since then. So, what is the upshot? What's the value to a buyer or seller to work with an agent who has experienced what makes what makes a property valuable?
well, that begs the question of, do I really need a appraisal prior to listing and selling my home? In most cases, I would say yes. I think it's a tool that you can use to list your home at a fair and proper listing amount, as opposed to just winging it, looking up Zestimate on Zillow, which their algorithms are okay if it's a cookie cutter home, but not all homes are cookie cutter homes. So with that said, I think it's very important to work with a seasoned realtor, a lot of them who have done comparative property analysis. If they're brokers, they can do what's called a broker price opinion, like I can do. And then if you can find someone who has former um, appraisal licenses and training, like myself, the value is astronomical, because I look at 1,000 things when I walk into a house, not just a simple 20, 30 things that most non-trained value professionals can come up with.
And I want to comment about that. As somebody who's worked in high tech, I am extremely suspicious of these Zestimates and basically home values by algorithm. Um, the value of a property is whatever the market will bear. And in order to understand what the market will bear before you actually sell a property, you want a competent appraiser to give you an estimate on what the market will bear. The Zillows of the world, they're just valuating your property by algorithm. Okay. It's a black box. You don't know what information is fed into that algorithm. Banks love estimates because the algorithm tends to favor a high overpriced home value. But just because Zillow says your property is worth a given amount doesn't mean that's what it's going to sell for. In fact, there's a lot of inventory that's been on Zillow for months and months and months. It doesn't sell because it's overpriced, because its owners have inflated opinion of what their home is valued at. So I want to talk more about like why it's important to have a man or woman on the ground to actually inspect the property, and they have their own frameworks for why certain attributes or why certain attributes are worth a given amount.
Exactly. I think your question was the online estimators versus having either a trained professional broker like myself or a
Yes.
licensed appraiser who is best qualified to give you a realistic value of your home so that you can list it to that value or even a little higher in the seller's market. In a buyer's market, you would take a look at the current value and project out a month, 2 or 3, because that's typically how the selling cycle is that long. You would even try to list it for 2-3% less than that to attract the buyers over all your competition, because in a buyer's market, instead of 4,300 homes in our areas for sale, there might be 25,000, and it
How
becomes.
often have you seen in your personal experience where a house or property um, sells for an amount far different from the Zestimate?
Oh, all the time. Even if it's a cookie cutter property, the estimate wouldn't know. Typically, if somebody put in a $40,000 pool or a $100,000 backyard, or if they put in solar, paid for or leased, they wouldn't know if they put in a brand new air conditioner or a brand new roof. All these things are add value to your home if you itemize them and you give them to the appraiser. You give them to the appraiser a full list of everything that you've done and show them the proof that you put them in. In other words, the invoices and the fact that these were put in the last 6 months, year, 2 years, 3 years, even 5 years. Because a 20, 30-year-old roof is not going to have the same value as a roof that's 3 years old.
How often, in your personal experience, again, have you seen a Zestimate factor into the asking price for a property?
I think that a lot of times the sellers, not necessarily the realtors. Remember, realtors are trying to get the listing. And unfortunately, a lot of times they over exaggerate the value of a property so that they sound better than the other 1, 2, 3, or 5 other
So they can
agents.
get that listing.
So they just get the listing and it doesn't sell for 2 weeks, a month, 2 months, even 3 months. And then typically after about 3 or 4 weeks now, we see that they will drop the price when they could have just gone originally with a more seasoned qualified agent who could back up the listing price
Mm-hmm.
rather than just waste all that time and effort. And the other thing I see is sellers overspending to get their home right. Tyler, I think you mentioned you know someone who recently whose home's been on the market like 90 days or more, who spent $50,000-$60,000 to prepare their home for sale, but they had the wrong agent perhaps because they overpriced the property, and now they've lowered the property. Hopefully it'll sell soon. But if it's important to sell your home expeditiously, if you want to get the maximum amount of money, go with someone who can back up the market or overpriced listing amount to the other agents, to buyers, even providing documentation to the buyers to hand to the appraiser. All of that information, to include the list of upgrades that you've done on your property, all of those things can add value to your property, and you have a much higher success rate of getting not only appraised value, but higher than appraised value, we call market value, to where if you can create the frenzy, you're going to get the maximum amount of money today.
And I would add that it takes a person to understand the a Zestimate, these online property valuators, they're just algorithms, okay? And they're going to spit out a number according to how the algorithm is written. They have no oath or responsibility to properly value the property. So what happens functionally is they tend to favor the banks, which is a higher property valuation than is realistic. It still takes a person to understand a market and to apply a valuation framework to the property in question, because only a person can understand how the market is going to react to the asking price. So I just wanted to throw that in there because I think people put way too much faith in these online valuations and Zestimates. I'm not picking on Zillow. There's few other ones out there, but it's just put your confidence in somebody, in a person, and not an algorithm who understands the market. And yeah, it's a value add that you're able to bring your experience as a appraiser to your real estate clients. Certainly that is the case. It's still a good idea for people to get a appraisal on their property. Certainly that's the case too. I think one of the things that you bring to the table as far as your clients are concerned is that really grounded opinion on what they can, what amount they can get for their property, or what amount a property should be purchased for, what's realistic.
Yes, when I take a listing, one of the first things I do is I actually do, we can't call it an appraisal unless you are an appraiser. I do a broker price opinion. Of course, my broker price opinion looks exactly like an appraisal, and it can be handed in almost as such, but that's just because I have that trained background, but we call it a broker price opinion. I sit down and I go over with my sellers the comparables that I use, and other factors also. In other words, a lot of things like Zestimate would not know that you're under an airplane path, meaning there's a noise nuisance factor there that could reduce the property value as much as 10%. It may not know that you're right on a busy highway or next to a toxic dump or a pig farm. Estimates don't know these things that add value. You might be in a great school district where the algorithms don't know a lot of these positive and these cons to valuing property.
Yeah. Or, an algorithm isn't going to be able to tell you that a property is potentially less appealing to the target market because it's got its bedrooms on the second floor and you have to walk up a stairs to get to them, right? Maybe that property in its area is appealing to seniors, and the algorithm's not going to be able to tell you that. But a competent, trained person who's grounded in the principles of evaluating a property will be able to tell you that right off the bat.
Yeah, that's correct. And a lot of these things I've talked about. There's a lot more detail in the book I wrote years ago called "The Equity Dreams." Um, it details out a list of things you should be looking for when you're listing your property to get the most value from an appraisal. And then there's a separate list detailed in the book for if you're a buyer and you've accepted an FHA or VA um, uh, offer, then it has a list of things mainly to do with the differences, mainly to do with the safety items. So, yeah, contact us and we'll be glad to send you a copy of the Equity Dreams book, which details out preparing your home for listing, how to get the most value from an appraiser. So make sure you do that if you're thinking about listing your home shortly.
Yeah, and I just want to back up your plug for the book. This book tells you how to sell your home yourself. Okay, if you do what's instructed in the book, you don't even need to hire a real estate agent like us. A lot of you will, anyways, because hey, there's work involved. If you're going to do it yourself, well, you're going to do all the work yourself. So, at the very least, you should be interested in a laundry list of considerations that you're going to have to take into account when you go to sell a property. And this is going to walk you through what you need to focus on, what a buyer's looking for, everything you need to know to sell your home yourself. And we'd be happy to send you a copy. Just get in touch with us. You can email us at tyler@franklinwest.net or richard@franklinwest.net, and we'll make sure to get you a copy of the book. So, Dad, what if people want a seasoned former state licensed appraiser like you to walk their property for broker price opinion?
Well, that's simple. Just
Would you
contact
do
us.
that for them?
Yeah, of course. At no cost and no commitment. We walk the property together. If you want to sell your home yourself, I'll probably even give you some tips. It's very difficult. Um, the national average for folks who for sale by owner versus hiring a professional full-time service realtor or broker is about 9 to 12% less on an average on the sale of their home. So when you factor in that they are paying these days typically around 5%, some places 6% still, but most places 5%. That's the agent really pays for itself over, in most cases, someone trying to sell their home themselves. But by all means, there are gifted people out there, salesy people who like all the annoyances, who know contract law, real estate contract law, who can read and decipher the more than 100 documents that get involved at times, and can handhold the sellers through the process. Um, and be there on your side of the table if there's ever a legal conference after any kind of litigation. It's always nice to have a professional on your side.
And you know what? That reminds me of it reminds me of the value of time. Okay. Do you want to throw spaghetti at the wall and see what sticks? There's a lot of properties out there. They've been on the market for 6 months or so because the owners, they don't understand the market, right? They're shooting shot. Or do you want a sharpshooter, someone who understands the market in context at this point in time, who can distinguish between a desirable attribute of a property and an undesirable attribute of a property, or a desirable attribute of the marketplace and an undesirable attribute of the marketplace? You know, you cannot make those distinctions by algorithm. I just wanted to reinforce what we were talking about earlier. What are your closing thoughts on this?
Well, just to be off topic here for a second, it's very important to me to inform folks that there are teams of real estate and mortgage professionals out there that support our clients in our case. I know Christy is going to be coming on here in a few minutes. When I take a listing and we get 4, 5, 10, 20 offers on a property, one of the things we do is we get the permission first. We contact our potential buyers, mortgage broker directly. We ask them the right questions. That helps ensure that the folks who we are possibly going to accept their offer on or have accepted their offer on can qualify for the loan as presented in their offer. And I think that's extremely important because I can tell you over my near 30-year professional real estate career, how many times you get to the 11th hour and something happens financially, something is revealed to the mortgage broker that the buyers weren't open and and provided all of the honest information that they should have. So it's really important that our clients know that on our team, we have a mortgage broker, and I make sure when accepting an offer that I get permission from the buyers to contact their financial CPA, financial advisor, their bank, their mortgage broker, whatever we feel we need to ensure our sellers, that they can feel a lot more confident that their transaction is going to close.
Well, that's a great segue on to our next segment with Christy. Thank you for joining us today and explaining this. You know, it doesn't have to be complex, guys, but explaining this overlooked world of property valuations and appraisals. I think it's a great value add for your real estate clients, that you're able to look at a property through the eyes of appraiser, someone who was state certified appraiser. So thanks again, Dad. We'll see you on the next episode. And now we're going to bring in Christy to talk about the funding side, the financing side.
Thank you, Tyler.
Appraisals.
And thanks, folks, for watching.
Welcome, Christy, to the West Report.
Hello, everyone. I'm so excited to be here. I've got so much to talk about regarding appraisals.
I bet you just couldn't hold yourself back.
I know. Yeah.
So why does a real estate transaction depend on appraisals from the financing side?
That's a very good question. Well, the lenders, they want to know what the value of that property is. And so a lot of times I'll get questions from a borrower who says, well, if the appraisal comes in higher, does that mean I don't need to bring in as much down payment? Well, the answer to that question is no, it doesn't affect your down payment, because what the lender will look at is the purchase price that you're agreed upon between buyer and seller and their appraised value, whatever is less. So if the appraisal comes in less than the purchase price, then the lender will go off the appraised value. And if vice versa, if the appraisal comes in higher than the purchase price, then the lender will go off the purchase contract price. So it really, as far as down payment, they're going to look at the lower of the two and base it on that. And so that brings me to the next question that will probably come up is, why is if we waive the appraisal, which you guys were talking about, why do I need to get an appraisal? Well, I come back to the lender needs to know what that value is, either purchase price or appraised value. And so that's the main answer for that.
Okay. So I find that interesting that the lender is going to go off the lower of the two. That seems consistent with free market principles right there. So what should what is the lender going to look at in terms of home value, and are there any things that they could be a red flag for the lender, that they might make a determination against making that loan if they see it?
Yeah, and it really depends on the type of loan you get. Conventional loans are easier. They're less strict than, let's say, an FHA or a VA loan. And the aspects of, let's just start with a VA loan. A VA loan requires a clear termite pest section 1 and section 2 clearance. And so typically the seller needs to pay for that, because the buyers really aren't required to pay for that because they don't own the home. So when you're listing your home, you got to decide, do I have any termites problems or peeling paint or anything that an appraiser or a termite inspector might tag? And so that's why it's very important to at least get a pest report prior, even if you decide not to get an appraisal done prior to listing it. I think it's a good idea for the sellers to do that. It's not a requirement for the lender on the lender side, because the lender is going to pull their own appraisal anyway. We are not going to use the seller's appraisal. So, but on a VA loan, you got to clear section 1, section 2, and you can't have things like a wavy roof because the appraiser will pick that up. Yeah.
Yeah, because all these things that you're mentioning, they imply serious damage to the home.
Yeah, and VA financing is 100% financing. So in a sense, they're protecting the veteran from getting into something that they might not be able to afford. I mean, VA financing offers 100% financing, and so they don't need to come in with a down payment. And so, they might not have been able to save, and so they don't want them struggling to try to fix something like a leaky roof or a leak under the sink that causes a bigger problem.
Yeah.
And goes on and on.
So you said something earlier which was interesting to me. You said that the lenders are going to go off your own appraisal anyways.
Correct.
So does that mean that on the purchase of a home, the lender is always going to order their own appraisal?
Correct. And we actually go through what's called an AMC, an appraisal management company. And so it's a third party. It's not connected to us. We're not allowed to talk to the appraisers in any way, shape, or form as far as the loan officers because we have an interest. And so they want to get an opinion from a licensed appraiser of what the value is without anybody possibly saying, hey, we need to bring it in at this value. It's funny that real estate agents get to talk to them, but anyway, they won't allow us to talk to them. So it's a third party that it goes through, and so therefore we can't use the seller's appraisal because it's the sellers ordered it, and so they might have a biased opinion. I don't know. I mean, that's pretty much why they won't use an outside appraisal.
Okay. Yeah. I mean, there's an inherent conflict of interest in free market principles, which is like the seller wants to get maximum value for whatever they're selling, and the buyer wants to get the lowest, right? So they
Correct.
can acquire it for less.
Correct.
So it makes sense, yeah, that they would kind of cordon off the line of conversation between the lender and the appraisers. Are there are there any instances where the lender talks to the appraisers?
Not the loan officer. Now,
Okay.
there's a processor involved, and the processor sends notes through the AMC, the appraisal management company. And so not even the processor is talking directly to the appraiser. It's handled by a third party. They collect the payment, and the payment needs to be paid by the buyer because it's the buyer who's getting the loan. The seller doesn't pay typically for the appraisal, although in contract, I guess you can agree to anything. But it's typically the buyer that pays for the appraisal, and they need to pay for that up front with a credit card. That's the only thing that we require that is an upfront fee. If it is a conventional loan, we do not require any additional inspections. Of course, it's always best if you get a home inspection as a buyer, but we only require that there's an appraisal unless it's written into the contract. So let's say it's a conventional loan and the guidelines for conventional loan does not require termite and pest inspection. But if it's in the contract, then the underwriter is going to request to see it. Now, it doesn't mean that they can't get these inspections. It's just they can get any and all inspections they want. Just, as far as the contract, they're going to go off of what's in the contract and what's in the automated findings. And also what the appraisal states on his appraiser report, because if he finds something in there that is a health and safety issue, underwriter is going to pick that up. And like one of the previous things we talked about before was horse properties. And let's say it's acreage and the appraiser goes out there and there's a barn on it and looks like it's a boarding facility. That's going to be a red flag for an underwriter. And so it's very important. Basically, the appraiser is the eyes, and they take pictures of every room and measurements. And so if it looks like you're running a horse facility out of there, could be a problem because then it's a business because we do residential loans.
So have you ever mortgaged a property without an appraisal?
On refinances, sometimes we get what's called an appraisal waiver in the automated findings. I've never seen it in my career of 23 years now on a purchase. But we go off of the the automated guidelines as far as appraisal waivers. And there's no rhyme or reason that I've figured out how to get an appraisal waiver, but typically it's a property that is in kind of a residential neighborhood. They have a lot of equity. I've even gotten one with somebody that was self-employed, which I thought that wasn't going to happen, but I did, and that was nice. I had an appraisal waiver. And then other ones, they had tons of equity, excellent credit, W-2 wage earner, and could not get it to get a appraisal waiver. So I don't know, but
what's the typical price on a appraisal?
well, that varies. It depends again once on the property and if it is in town versus a remote area.
Okay, that can make a
So
difference.
it makes a big difference. Also, they look at the value of the property. If it's over $1 million, you might be required for the jumbo financing to get 2 appraisals. That's fun. Anyway, yeah, because
Will the same AMC appraisal management company handle appraisals from both sides of the transaction?
Well, but the AMC, basically, it's like I kind of look at it kind of like playing bingo. They put out the order, and then an appraiser says, "I'll accept that," or a ball drops, or whatever. It's like,
Yeah.
okay, this is your appraisal if they accept the order. And so you'd have to have 2 different appraisers, obviously, do it, but it can go through the same AMC. I think that's the question you're asking.
Yeah, well, that's what I was getting at. So, is it ever the case where the same appraisal management company gets asked by the lender and the buying side and the seller
No.
to do an appraisal on the same property and their valuations differ?
Well, the valuation does differ from appraiser to appraiser. I mean, typically it's a range, it's a percentage. Depending on, so it's not going to be an exact science. It's kind of like going to the doctor, you don't know what's wrong with you and you might get 2 different results, but that's just my opinion. But
Yeah,
I've seen a
yeah.
lot of appraisals, and sometimes there's good appraisals and sometimes there's not so good appraisals.
It's an
Um,
art and a science, right?
yeah. And I've challenged some of them. If you find some flaws, I mean, and we're all human, and sometimes the appraisers get really busy and they make an error. If it's caught, then it can be corrected. It does go through an underwriting review. So, they do scrutinize these appraisals and look at them. So if there's something obvious, like, you're purchasing a single family home in a residential area we call them stick built. So basically made out of wood, whatever, with stucco, or versus a mobile home on a piece of land, that's completely different. And if the appraiser picks that, and because they're supposed to be a similar property, so that's not a similar property, that would
So, I
definitely
mean,
be
all that to say, the appraisal isn't the final word on the property. The underwriter is.
the underwriter is. But so basically the appraiser is the eyes and because they take lots of pictures, they take measurements. The measurements might be different than what the county has. What we call a property profile that shows, when they built the structure, what the builder was saying that the square footage that we were going to build is, I believe, what the county has. And then, it might be a little bit bigger, a little bit smaller. Typically, it's a little bit bigger square footage, not by much, some feet.
Do appraisers still bring the lasers in to check out the square
Yeah, I
footage?
think they do. I never get to go there while they're doing it because, of course, I can't talk to the appraiser. It would be a violation. So, yeah, due to the housing meltdown, they tended to blame some of that on us mortgage people, which I'm not really
Yeah,
sure how that happened when
when it
they
was the banks
when
up
they
all
when
the
they
funny
had the
business.
programs. But yeah, but anyway, moving on from that. Yeah.
Yeah. So your hands are, you're handcuffed for a lot of things in the business you're in. What are some of the other restrictions that apply to loan officers and
Well, the biggest one is that we can't even, I'm not even allowed to even order it through the AMC. But I've got plenty of other things to do, helping my clients through the process of getting the loan approved and all that good stuff and documentation. But one of the things I'd like to talk about is that the most overlooked thing that I see is the carbon monoxide detectors. So if you have a
Oh,
two-story
really?
house, yeah, and that causes the, let's say they're missing, they have a carbon monoxide detector, like in the kitchen or something, but it's a two-story house and they've got the fire, alarm or fire detectors. It does require one in every bedroom. So, and some of these compliance, haven't been updated. So sometimes the houses, if they're older homes, they may just have it in the hallway, and we require to have the fire alarms in every bedroom and a carbon monoxide detector in every level. So if it's a two-story house, we need one on the main floor and one upstairs. The other thing is having the hot water heater double strapped. And, these are just real basic things and just things that would be good to know for a
You'd
seller because it's an easy fix.
you'd think that the lender wants to protect their investment or something.
Yeah, they're putting the money up, so they definitely want to protect their investment. But what happens is if these items are lacking from the property, the appraiser is going to have to come back out and take a picture of the deficiencies, whatever they may be, to make sure they have been fixed and they're not a health and safety issue. It's very important. And so that's an extra cost to the buyer. It's typically $175 to have an appraiser come back out and snap some more pictures. So simple thing when even the buyer can go through and when they're looking at the house and just double check and make sure there's smoke detectors in all the bedrooms and carbon monoxide on both floors just to so you don't have to
And to have a appraiser come back out,
yeah he
is it
was
the same on the seller side? So if the seller's unhappy for whatever reason with an appraiser's valuation of the property, do they have a recourse? What happens?
I've ran into that before. One of the most recent ones was they had built a instead of having the laundry in the garage, they decided to extend the house a little bit by about 4 feet. It took up 4 feet of the garage space,
Uh-huh.
and it wasn't that much. I mean, it's just a wall with a door. You could still get a car in there, and I think the measurement was about 16 feet 8 inches, and so most of the cars would fit in there. I mean, you're not going to get a long bed truck in there, but
So what
you,
was the crux of the disagreement with the appraiser?
he only gave a valuation of a one-car garage, even though you could fit two cars in there, and so that was an adjustment of about $5,000.
Mm-hmm.
And the laundry was always in the garage, so did it cut down the garage? But just because that wall was there, now the appraiser says, nope, I'm only going to give you $5,000 instead of, so they take a deduction off of other properties of similar
Uh-huh.
build with two-car garages, and they minus out the $5,000 for what the other
As
properties
an
had sold
adjustment.
for. So,
Uh-huh.
that can make a seller upset. That was one instance. I mean, there could be many, but um,
So did the seller take into account the appraiser's opinion or disregard it?
They made comments to it. I mean, there's things that you can do. I mean, if you're selling and you really need the $5,000, you just take down the wall, and then the appraiser comes back out and gives you the another $5,000. I mean,
Yeah.
but the appraisers have to go off of what I believe is called the Marshall and Swift guideline or
Okay.
guidebook. Richard knows more about that, and he's over the years has talked to me and helped try to educate me as far as appraisals. And it's just been so wonderful to have him as part of our wonderful team because I kind of feel like I have an edge on other um, mortgage loan officers because a lot of them would have to call up an appraiser and say, "Hey, what do you think about this?" I just, say, "Hey, honey, can you take a look at this for me and give me your opinion?"
Yeah.
So it's a huge benefit for us that he has had that experience in his background as far as being a licensed appraiser.
Yeah, it really is. Well, I think we're coming up on the hour here. Do you have any closing remarks that we didn't cover already?
If I just would like to reach out to everybody. If anytime you have any questions, please reach out to the West team, and we're here to help. And we love helping people and answering any questions they may be, and no matter what part of the transaction they're in, whether they're thinking about selling or if they're thinking about buying, we basically have you covered. And if you need to reach me for any mortgage questions, you can always call me direct. My cell phone number is area code 916-995-9324.
Wonderful. Hey, thank you, Christy, for joining us for another really in-depth conversation about appraisals today. So we'll see you again on the next West Report, and I hope you all enjoy your day. Have a productive and enjoyable day. Thanks for tuning in.